The Bank of Canada announced a cut to its benchmark interest rate on March 12, 2025, bringing it down to 2.75%. This move comes as Canada grapples with escalating trade tensions with the United States. The rate cut signals the bank's recognition of serious economic threats posed by these disputes. Lowering interest rates is a tool to stimulate the economy, encouraging borrowing and spending. This action is a direct response to U.S. tariffs on Canadian goods, which have created uncertainty for businesses and raised concerns about economic growth. The Bank of Canada Governor Tiff Macklem described the situation as a new crisis and stressed that the central bank is prepared to take further action if needed. The United States has imposed tariffs on a range of Canadian goods, targeting key industries like steel and aluminum. These tariffs have created uncertainty and disruption, as these sectors rely heavily on exports to the U.S. The U.S. argues that the tariffs protect American jobs and industries, claiming Canada has engaged in unfair trade practices. Canada disputes these claims, maintaining that its trade practices are fair and in line with international agreements. The impact is already being felt: higher costs for imported materials, delayed investments, and layoffs. The tariffs have strained the long-standing, deeply integrated trade relationship between Canada and the U.S., threatening to damage this important economic partnership. The U.S.-initiated trade war is sending shockwaves through the Canadian economy. Beyond the direct impact of tariffs on steel and aluminum, broader implications are even more concerning. One immediate effect is the decline in consumer confidence, as Canadians worry about job security and economic stability. This fear is causing consumers to cut back on spending, potentially slowing down the economy. Businesses are also anxious, facing disrupted supply chains and increased costs. Many rely on imported materials from the U.S., and the tariffs make these materials more expensive, straining profitability. The uncertainty is making it difficult for businesses to plan for the future, slowing down investment and potentially impacting long-term economic growth. The Canadian government has condemned the U.S. tariffs, calling them unjustified and harmful. In retaliation, Canada has imposed its own tariffs on a range of U.S. goods, strategically targeting U.S. industries and political interests. Beyond tariffs, Canada is actively seeking to diversify its trade relationships, strengthening ties with existing partners and exploring new markets. By reducing dependence on the U.S. market, Canada hopes to mitigate the impact of future trade disputes. Canadian businesses are adapting by seeking alternative suppliers and exploring new markets. The Bank of Canada's interest rate cut aims to support the economy by making borrowing more affordable, encouraging investment and spending. The trade war between Canada and the United States has cast a shadow of uncertainty over the Canadian economy. The full impact of the tariffs and the ongoing trade dispute remains to be seen, with much depending on future actions by both governments. The Canadian economy has shown resilience in the past, but the current trade war presents unique challenges. The integrated nature of the Canadian and U.S. economies means any disruption will have significant repercussions on both sides of the border. The coming months will be crucial, with the Bank of Canada's interest rate cut signaling the government's readiness to support economic growth. Diversification is key for long-term stability, reducing dependence on the U.S. market and forging new trade relationships. While disruptive in the short term, the trade war could ultimately strengthen Canada's economic resilience and open new global opportunities.